Happy Friday, Brian Manning here with another weekly update. Let's get right to it. Let's see, big news for this week, Wednesday this week, and I actually can't even believe that it's a jobs week already. So the first week of every month, we get jobs data, and the jobs data is telling us what took place in the prior month. So first Wednesday of every month, we get ADP. So ADP is the largest provider of private payrolls in the U.S., and ADP said that in the month of May, there was an expectation of 8.75 million job losses, and we got 2.76 million job losses. So still staggering that months leading up to this, we were talking in the 200,000 people range, and a 600,000 person number was just like mind blowing. And here we are talking in the millions still. It's unbelievable. Also, Wednesday this week, we get the MBA, Mortgage Bankers Association, telling us what's going on with mortgage applications. So 7 straight weeks we have mortgage applications up for purchase transactions, which is really good to see. So super excited to see just continual strength in the purchase market. Also, something to talk about that's notable is just the Federal Reserve. So on average, the Federal Reserve has been buying about $4.2 to $4.5 billion a day in mortgage-backed securities and treasuries. So they have really, and their infusion of cash, forced interest rates staying low. And what's incredible is that from about mid-March through now, they have spent about $700 billion on mortgage-backed securities and treasuries, which is really incredible. So all of us should be giving Jerome Powell and the Federal Reserve a high five, because it's really Jerome Powell that has forced rates to where they're at right now. So us as consumers, mortgage lenders, realtors, everyone that's reaping the benefits of low interest rates right now, is really because of what the Federal Reserve is doing and the $700 billion in treasuries and mortgage-backed securities they bought. Thursday this week, and every single Thursday, we get initial jobless claims. So initial jobless claims are how many new people are filing for unemployment. So, and this is last week's read. So last week we had 1.88 million new people file for unemployment. And then we also look at continuing claims. So a continuing claim would be how many people are filing for unemployment second time and more in a row. So they're continuing to get unemployment. And that number was up 660,000 people to 21.5 million people in continuing claims. So still crazy. And then today we get this BLS report. This BLS is the Bureau of Labor Statistics. And first Friday of every month we get BLS report for employment status. And when everyone was expecting a job loss in the month of June from the BLS of 7.7 million people, the BLS came out and said, oh no, we had 2.5 million new jobs created in the month of May. I'm not sure if I believe it or not, but that's the report and that's what it is. So certainly because of this, and we really did expect the report to not hit the expectation, stock markets are rallying, bond markets are tanking, and mortgage rates are going up. So I'm super excited because our entire pipeline, every single client we talked to yesterday, we advised them that we thought this was going to happen, and we locked in their interest rate ahead of rates going up today, and rates are definitely higher today. So if you're a mortgage lender you're working with and your mortgage lender is not talking to your clients about what's happening in the markets, whether they should lock their rate, not lock their rate, why they should lock their rate or why they should not lock their rate, you need to give me a call, because we're all over this and we talk to our clients about this all the time. I'm around all weekend. I would love to help you. I'd love to assist you with your pre-approvals. If you have any questions, give me a call or shoot me a text. Happy Friday. Have a great day.